At 2:47 a.m. Beijing time, China's largest exporters received a directive. No more U.S. dollar transactions. By morning, global markets jolted. Bond yields spiked, Wall Street braced, and the question arose, is this how the dollar loses its dominance? In April 2025, the Chinese Ministry of Commerce told over 400 firms to halt all new payments in U.S. dollars. Within 72 hours, dollar-denominated trade volume dropped by 12.4%. Analysts saw this as Beijing institutionalizing de-dollarization. The yuan's share in global trade finance soared from 4.5% in mid-2023 to 7.6% by March 2025. China's push of the digital yuan into energy contracts signaled more than just a shift in currency use. It's a move for global power. The financial impact was immediate. U.S. Treasury yields jumped, with the 10-year bond climbing to 5.09%, its highest since 2008. Over $212 billion in treasuries were dumped within days, mostly from Asian sovereign funds and institutional investors. By March, China had slashed its U.S. debt holdings from $859 billion to $729 billion. This wasn't just a glitch, it was a signal. As Mohamed El-Arian warned, this shift could redefine global borrowing costs, with volatility in the U.S. bond market reaching levels unseen since March 2020. If Beijing treats the dollar as a liability, what does that mean for its dominance? Dollar dominance has been eroding for years. IMF data reveals that U.S. dollar reserves held by global central banks dropped to 57.2% in Q1 2025, from 71% in 2000. China's sudden halt to dollar settlements may have tipped the scales. It's not just China. Eswar Prasad, former IMF official, noted a systematic decoupling among BRICS nations and even some G7 countries. The yuan's use in cross-border settlements surged to 48% in March 2025, surpassing the dollar for the first time in Chinese trade history. On April 18, 2025, Saudi Aramco confirmed its first full oil shipment to India, settled in yuan, marking a significant shift. The reserve currency's decline happened slowly, transaction by transaction. But what is replacing SWIFT, and why should Washington be concerned? If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way. SWIFT processes over $5 trillion daily, but China co-developed mBridge with the UAE, Thailand, and the BIS Innovation Hub. Meanwhile, China's digital yuan now handles over $250 billion annually in domestic and cross-border transactions. This is operational, not just theoretical. At home, President Trump's response added fuel to the fire. On April 19, 2025, his Truth Social post demanded, "Cut rates now or we risk total collapse." Within hours, the dollar index dropped sharply and capital outflows reached $76 billion. The irony? Lower rates might stimulate short-term lending, but also erode long-term confidence in the dollar. El-Arian cautioned that such a move would accelerate the flight into non-dollar assets. For the first time in 40 years, the dollar lost value against the yuan, yen, and ruble. As Washington's fiscal policies weaken, Beijing rewires the global financial system. China's exports grew 8.9% year over year, while U.S. exports fell by 3.2%. Trade is no longer just economic, it's strategic. The U.S. economy contracted by 0.7% in the first quarter of 2025, marking 2 straight quarters of negative growth. Meanwhile, consumer credit card defaults spiked. The Fed faced a tough choice: raise rates and crush the housing market, or cut them and watch the dollar falter. The U.S. export sector also suffered, with Boeing facing $14.2 billion in order cancellations. Trade credit insurers slashed U.S. exposure limits. The U.S. didn't just wake up in a world with fewer buyers, it helped push them away. The real question now isn't whether the dollar is under attack, but whether it's being self-sabotaged. As China strengthens the yuan, America's own policies drive disinvestment. The next domino might not be a trade deal, but a global reserve currency shift. If that happens, the fallout will hit every American household. Is this the final blow to the dollar, or just the setup for something even more disruptive? Is the world preparing for life after the dollar? Or is the U.S. sealing its financial fate? Thanks for watching. Don't forget to like, subscribe, and check out another video on your screen.